Well, you gotta be flipping my flapjacks. Look at that. The Wall Streeters all go on vacation this week, and we just party on back to back to back. Great days for the public count. I believe a few days ago, $90,000 up. I believe yesterday was, I want to say $55,000 up or so. Today, $40,000 plus up. Man, we just got to keep these Wall Streeters on vacation at this point in time, right? Some big movers in the public count here today were ELF up over 4%. Look at AMD. People were panic selling that stock just yesterday. Just yesterday, they were selling it for $195. Same people are buying the stock for $215 today. Unbelievable, right? Honest up big here today. Estee Lauder up big. SoFi up big. Palantir up big. Like just a good day overall. I said yesterday on X, I posted this. I said, I'll make this simple. AMD, buy. I posted that yesterday morning. I couldn't believe. I'm like, this is ridiculous. People are selling the stock off because of this crazy news. This is the last video I will be recording before Thanksgiving. So happy Thanksgiving to everybody that will be celebrating out there. Hope you guys have a great one with your families. I know I will be enjoying mine. Three core subjects I want to speak about here today in this video. One is my thoughts on this market when these Wall Streeters come back from vacation on Monday. Okay, so we only have one trading day between now and then. That is going to be Friday, which should be a shortened trading day. And then they're back. The Wall Streeters are back on Monday. So what are my thoughts about it? Do I think the market's going to start going back down again? Do I think it's going to hold up? I'll share my opinions and perspectives there. Second thing we're going to get into in this video here today, I'm going to give you 4 tips for everybody watching this today to become a much better investor. You do these 4 things, you're going to become exponentially better investor, okay? And so I thought I'd do a little bit of learning today, I guess you can say teaching, okay? Third subject up here we'll speak about here today is the number one stock. I've made a decision on the number one stock I want to focus on buying for the remainder of 2025. So I'm going to share that stock in this video, why that stock specifically. I'll also share my entire buys watch list here in this video here today, but specifically we'll get into that stock a little bit. One thing only I need from you guys, if you could please just smash that little like button, that little thumbs up button, make that glow for me. I appreciate it. Everybody that's already done that, you didn't even need me to say anything. I appreciate you guys. Additionally, you might want to subscribe here to the channel. We're now at 900,000 plus subscribers strong. Big deal. Here it is, folks. We're only a little over 24 hours away from the massive Black Friday sale on 1000X. Pinned comment down there. Click on that, fill that out. Get ready for that deal to receive that deal over. It is we're going to send the deal out on Thanksgiving night, essentially. So just over 24 hours from me recording this, essentially. And when you join us in there, we'll also send you your Steel membership card in the mail to your house, complimentary. And we now have 2,176 people ready for that sale. We need a lot more people than 2,176. Everybody watching this needs access to that deal. We're going to have a monthly deal, 50% off a monthly membership, and we'll have 50% off a 3-year membership. So whether you want to join on a monthly basis or a 3-year basis, we're going to have a deal for you. Okay, so make sure everybody takes advantage of that deal out there. And man, FedEx, UPS, they better be ready because we're going to be sending out a lot of Steel membership cards very shortly here. Okay, alrighty guys, so first subject up of these 3, my thoughts on this market and all those sorts of things when these Wall Streeters come back on Monday. Are we going back down to Chinatown? Here's the deal. When I look out there, the most important thing to kind of drive market sentiment recently has been Bitcoin and Ethereum. No, Bitcoin and Ethereum bottomed last weekend, and then they started to come back very strong, right? And ultimately, the markets trended up as well, right? I will be watching Bitcoin and Ethereum like a hawk over the weekend, Saturday, Sunday, essentially, because I'm going to be looking for weakness in those two. If Bitcoin and Ethereum start to weaken over the weekend, that is a very bad omen for the market. I mean, a very bad omen. That basically means like this was just a short-term little like pop here, and we're going right back down essentially. If those start to see a lot of selling pressure. So keep a close eye on that because that's going to ultimately let you know what's going to happen in the stock market this upcoming week. If all of a sudden you start to see Bitcoin falling rapidly, Ethereum falling rapidly, likely markets going right back down to Chinatown as well. So do keep that in mind, okay? This week that we have coming up here, here's a deal, okay? If selling resumes next week, okay, and it doesn't matter all this positivity we had this week of Thanksgiving week. If selling resumes right back, Santa's not coming to town. Santa's not coming to town this year. That's the bottom line in regards to that. If even with all this positive momentum, retail buying, algos setting the market up. If it just goes right back to selling next week, Santa's not coming this week. I shouldn't say this week. I should say Santa's not coming this year, essentially. And we can talk about the market maybe resuming the bull rally in 26. But yeah, okay. Now, you got to remember, a lot of people are assuming and a lot of people want December to be a great month for the market. And keep in mind, most of the time, December is a phenomenal month for the stock market. It's one of the best months for the stock market, right? But it's not always, right? And I've told you guys a million times, this year reminds me a lot of 2018, just, a softer version of 2018, essentially. And remember, in 2018, everybody wanted it to be a great December. They thought it would be a good December, right? And what we had is relentless selling. It started right off the bat, first week of December. And that's why I said this week is key to knowing if Santa Claus is coming to town or not. Because if you see that selling basically resume right in this very first week, we're going down. We're going down, okay? In 2018, you had relentless selling right from the jump. Monday, December 3rd, boom, right there it started, the selling. And it just kept going and kept going and kept going all the way until Christmas. And then finally the selling subsided and the market started to trend up. I think I've showed you guys this headline before, but if I never have, it's a very important headline because it makes you think, oh boy, December can get a little crazy. The stock market is on its pace for the worst December since the Great Depression. That was December 17th, 2018. Look at this. Look at that. 2018. We were on pace for the worst December for the stock market since the Great Depression, since 1931, man. It was rough. Got rough out there quick. And it wasn't like we had any black swan event happening at the end of 2018. And that's the thing. Like, people assume, like, oh, the only way it could get rough in a December is, like, you have to have some. No, you don't. You don't have to have some black swan event. The market could just go down. Like, 2018, we didn't have some black swan event. Like, Trump wanted the Fed to lower rates, and people thought the Fed wasn't going to lower, and all these sorts of things. Like, it was just a lot of like little drama. People thought tech stocks might have been overvalued. A lot of the same stuff actually that's going on exactly right now. That's why I said it reminds me so much of 2018 because it's all the same crap is going on right now that we actually had in 2018. People were worried about Apple's growth rates. Apple was the biggest stock in the market at that particular time, and what that meant for the market. And they're also worried about some other big tech stocks at that particular time. No different than now. People are worried about nvidia. Nvidia's the top of the market, right? So same story, just different a year, right? Same story, different day. Now, something I do like is I like that 10-year going down. I do like that 10-year. 10-year just went down under 4. And I think this is like, no one's even paying attention to this right now. I'm like, I like this. Okay, 10-year under 4. It's interesting. We know this 10-year is going down, man. We know it's going down. It's just a matter of time. If you can get some more fear into the market in December, you can have some more sell-off pressure, right? We could get that 10-year much lower. We could get that 10-year down to a 3.7, 3.8 number, right? Which would be a huge downfall from here, essentially. And then we can talk about getting that lower in the front half of 2026 as well, right? Now, keep in mind, if December does sell off, okay, my thought has always been, as far as how far we sell off in this market, I've always thought we'd sell 10 to 15% off the NASDAQ from all-time highs. So my guess is if I had to place a bet one way or another, I would place the bet that the market should go down a bit in December. With that being said, will I be placing a bet in the market going down in December? Absolutely not. Who knows? Like, the market's crazy. Like, who knows? Maybe Santa comes to town and we party on. Like, whatever. Whatever happens is whatever happens. It means nothing to me at the end of the day, and it should mean nothing to you. You know why? Because we buy the dip and we never trip. And so if December, the market sells off further, and a lot of these stocks that are great deals right now today get even to greater deals, right? And we got more tax loss harvesting, more fear in the market. It's great. No different than, 2 days from now is Black Friday. We're going to have the big Black Friday sale for 1000X, but also every retailer out there is going to be having Black Friday sales, and everybody's going to go shopping and love all the Black Friday sales and spend money like crazy, right? That's the same way you got to look at the market. Like, if December's crazy and the market goes down, great. We get Black Friday pricing on stocks. We're already getting great deals, and we just get better deals. That's fine. Most 90% plus of the people that watch my channel, you're workers. You work for companies or you run your own business. 90% plus you guys. It's only a very small segment of people that watch my channel that are retired, right? And so if you're working or you got a business, you got more income than expenses, you're ready to buy the dip, never trip. get even better price on stocks because you make even more money long term. That's the name of the game, ladies and gentlemen. Okay. Alrighty, next up here, 4 tips to become a much better investor. Let me give 4 tips out here. I think this should help a lot of people out immensely. And then we'll get into my number 1 stock in my buys, watch list, all that good stuff. Okay. Number 1, I call this one Mr. Simple. More income than expenses. It's the simplest one you can do. It's the key to financial success in life over everything else. Have more income than expenses. Okay. I started this way back in 2008, and I did that all the way to 2014. And that's how I built my first big nest egg of $200,000, which, I guess $200,000 was worth a lot more in 2014 than it is today. But that was impressive for me. Remember, I started as a guy cleaning dishes at Einstein Bagels for $7.50 an hour in 2008, right? So then to bring my net worth up and be able to have a portfolio of $200,000 worth of stocks in 2014 was a huge come up for me, right? That was massive. And able to do that because I had more income than expenses, so I was constantly funneling money into great companies, and those companies made me a whole bunch of money, and it piled up, right? And next thing you know, I was in a great position. 2015 to 2016, I took 2015 fully off because I was my firstborn son's first year of life, right? He was born toward the end of 2014, so I left Quick Trip and then just, enjoyed that year, his first year of life and took care of him and all those sorts of things, and it was a great time, but it was brutal from a financial perspective. It sucked. It was not fun financially. To have no income and just be living off my stocks, it was not fun, man. And then 2016, I started my real estate marketing company, but that year I also didn't have more income than expenses because I was just getting my businesses up and rolling at that particular time. So those 2 years financially sucked, man. I can tell you, you take away that income, it gets a lot harder in the market because, you're in a situation where you then get dips in the market and you're not able to buy them because you don't have more income than expenses, right? Because you're not working. And that's what I wasn't doing at that particular time. It's brutal. It's brutal to go through that, man. And you're looking at these great deals. And so what I got caught up into in that 2015 time is I got caught up in a margin where essentially there was stocks that were falling that I'm like, this is a steal deal. Like one specifically, I remember Win stock dropped to like $50 or $60 in 2015. I'm like, this stock is such a steal deal. And I started margining out money, and then the stock just kept going down more and more. And I'm like, this is ridiculous. Like they're going to be open in Win Palace. Like this is so stupid. The stock is trading at that. And I kept margining out heavy. And next thing you know, I got margin calls. Oh, it was brutal, man. Absolutely brutal. I'm telling you, investing is easy mode when you have more income than expenses. Like that's the biggest key to anything. Like it's just the biggest key. And then I got my business up and rolling 2017 all the way to current day. Always have more income than expenses, man. You gotta do that. Number 2, listen to conference calls. It's one of the most underrated things to be a successful investor in the market. There's a few reasons why. 1, you're gonna learn about the businesses on such a deeper level than what you currently understand, essentially. And so in those conference calls, keep in mind they got usually all the most important executives on those conference calls. Analysts ask them a bunch of questions, and I'm just telling you guys, you're going to be able to learn about those businesses on such a deeper level than you ever thought possible. It's so underrated, okay? Additionally, you're going to be able to get intel on those conference calls that a lot of people are not even aware of. You're also going to get, if you listen to enough conference calls, you're going to be able to start picking up on, we're humans, right? And so as humans, sometimes you're going to divulge information without fully divulging that information. It's no different than being a great poker player, right? I went down to play some poker last Friday. I hadn't played poker in quite a while. Everybody at that table, I think, was 55 plus. I was by a mile the youngest person at the table, right? I only lost like $50. I was impressed with myself. I started with 300. I played for quite a while, so I was like impressed. You know why it's so hard playing against those guys? They've been playing poker for like 100 years, and those guys are almost all of them are retired. They just sit down there, play cards all day. I don't do that for a living. I don't just go play cards. So me to hold my own is difficult. Is a difficult challenge, right? But those guys, they can look at somebody like myself and like, I'm going to divulge information without even realizing it. And so I go to make a good bet because I got actually a good hand. And what do? They fold out. And then if I'm trying to bluff, they know I'm bluffing. You know why? Because they do this all the time. Like somebody like myself goes down there, it's easy money for them. And so you listen to more and more conference calls, you get to that sort of level where you're going to be able to start listening and hearing information that is not necessarily said, but based upon tonality, you're going to start picking up on it and being like, oh, they're onto something here big. This is, oh, there's something they're worried about here. You're going to be able to pick up on all these things that it just comes with experience, years and years to listen to conference calls. I can hear things in conference calls that are never said. I don't know if that makes sense, but I hope it makes sense to you out there. Okay, so listen to conference calls, so underrated. It's one of the biggest things. You can go to a company's investor relations page and listen to a conference call that way. If you use 1000X, we have the trifecta for you. The trifecta. You can listen to conference calls. We have it dated way back, like conference calls to years ago, if you want to really go back that far and listen to them, as well as the most recent ones, right? And you can adjust the speed. So if you want to listen to it slower, faster, anything like that, you can adjust the speed. We also have the conference call transcripts. So if you want to read through what the conference call said, and sometimes that happens to me, like I actually read through conference calls transcripts quite often, because what might happen is somebody might have an accent that is a little hard for me to understand. I'm like, wait, what did they just say? And so I go back and read the transcript and I'm like, oh, okay, that's what they said there, right? And the third thing we now have is basically we have an AI program that will basically sift through the conference call and give you the highlights of the most important things that happened on the conference call as well. So it's a trifecta. So yeah, you can go to a company's investor relations page, listen to a conference call that way, or use 1000X and just get the trifecta there, okay? And basically just type in any stock you want, any ticker symbol, and boom, all the conference calls will pop up, transcripts, AI, summaries, all that good stuff, okay? Number 3, learn GVD, invest GVD. Growth, value, dividends. I preach this over and over again. And a lot of people, it doesn't hit them until you get to a bear market. And then they realize, oh, that's why GVD is so important. Growth, value, dividends. This is my investing principle on how I get through every bear market, make it out to the other side, and then the bull markets absolutely make more money than I ever dreamt. GVD, I call it 1, 2, 3. This boy right here, he was coached by his father. His father was a professional boxer, and since the age of 3, taught him how to box. And what his father did is he made sure his son knew how to do everything in the ring, how to handle any situation. He made sure his defense was impeccable, his conditioning was impeccable, his power was impeccable, and his speed of punch was impeccable. And he knew how to handle every single situation that's thrown at him, every single fighter, right? Then when his dad went to jail, his uncle, who was also a professional boxer, took up and taught him everything he possibly knows, right? And made about as perfect as a boxer you could possibly make. And that boy grew up to be somebody named Floyd Mayweather, arguably the greatest boxer ever. Never lost a professional fight ever. Should have won a gold medal in the Olympics, but got absolutely robbed. One of the worst officiating, judging situations you might have ever seen in the history of boxing happened to him. The kid got his gold medal stolen from him. Let's just put it that way in regards to that matter. And so made pretty much the perfect boxer. And so the way I think about that is the way I would think about investing, right? If you're a boxer and all you know how to throw is one haymaker and you're really powerful, think of Mike Tyson. Mike Tyson, oh my gosh, he was so powerful, right? Mike Tyson got knocked down a whole lot of times. He lost 6 fights, right? Because at the end of the day, his defense wasn't quite there. He wasn't ready to handle all sorts of situations, so he lost plenty of fights over the years. But man, did he have a power punch, right? You want to make a perfect boxer, they got to be great at everything. And so the way I think about it is nothing scares me in the stock market the same way if you're a great boxer, nothing should scare you when you step in the ring. You're ready for everything. And by investing through GVD, growth, value, dividend stocks, nothing scares me. Send the market through a 2-year crash. That's fine. I know how to handle that. My portfolio is positioned to handle that. Doesn't mean I won't get hit. Same way that you get in the ring, even if you're a perfect boxer, even Floyd Mayweather is going to get hit sometimes. That's fine. That's cost of doing business. That's a part of this game. But I'll be able to make it through that 2-year crash just fine and out to the other side and ready to make more money than I ever dreamt, right? And then additionally, send the market up a ton. I'll be ready to handle that as well. Send the market to bubble valuations. I'll be ready to handle that. I'll just step back on as many growth stock buys and I'll focus more on value and dividends and hedging and those sorts of things, right? Doesn't matter what happens in the market. I'm ready for it. I'm ready for any punch the market throws. It literally doesn't matter because of my investing principles in GVD and the way I position my portfolio, okay? That's how you play this game. Number 4, run projections. You've got to run projections on your stocks. A bull case, a base case, and a bear case has to be done for your stocks out there. I used to do this years ago through like a spreadsheet, essentially, right? Before I built 1000X, I would do it through a spreadsheet. It would take forever because what I would do is I'd have to import all the company's like recent numbers. Then I would have to look at what are all the analyst expectations for the company's current year. And then I would make my adjustments about like, I think the revenue growth of this company might be here and the net income growth might be here and the margins might be here and those sorts of things. And I'd run, a bull case, a base case, and a bear case for that particular stock. Took forever, but I used to do it that way, right? The great news is now on 1000X, we have that rate for you. We have intermediate projections and advanced projections. It's saves you so much time, it's ridiculous. This is our advanced projections. That's big boy stuff. That's big boy stuff, okay? Not everybody's ready for advanced projections. This is intermediate projections. Not even everybody's ready for intermediate projections, but this shows you like how we do this essentially, okay? So, bull case, we already have imported what 2025 expectations are, so the year is about to flip, so then we'll have 2026s go here, essentially, right? And then you can run your projections and alter like growth rates, revenue growth rates, net income growth rates, where net income margins are going, what's a fair PE for that stock over time. You might say, well, how do you get the confidence to even, plug in certain revenue growth rates, expectations, and net income growth? You want to look at how the company's been growing recently, what they've guided to, what the overall trend has been for the company over the last several years, and also listen to those conference calls, read up on the companies, the SEC filings, those sorts of things, and you'll be able to understand the company on a higher level. So when you go to make your projections, you feel like you're confident actually going to make those projections, right? So bull case, this is for a stock, American Express, right? Perfect example. So American Express, my bull case for Amex is basically they grow revenue 10% per year on average, nothing crazy there, right? 26 through 29, and 15% net income growth gets them to net income margins of 17%. If you had a company like Amex that's as sticky of a business model as that is, growing revenue top line 10%, bottom line 15%, 30, 35 P is pretty fair for a company like that. I get a CAGR, let's call it in the 20s, mid 20s. Very, very nice, right? Now, base case is just a fancy way of saying my expectations with maybe a slight bit of conservatism in there. I have revenue growth of Amex of 8% on average per year for the next number of years. They get to $103 billion of revenue, right? All the calculations are done for you. You just enter in the growth rates. Net income, I have them doing 12% on average. That gets them to $17 billion in net income come 2028. A 28 to 33 PE is pretty fair for a company like Amex growing at those sorts of growth rates. That gives me a CAGR rate around 20%. That's what I'm looking for in a stock. If I can run a base case that's relatively conservative and I can get a CAGR of around 20% expected over the next 4 years, I'm going to take that every time. I'm going to take that every time. The best part is when you can run your projections on a stock. Like I ran Amex here, only 5% revenue growth, extremely low. This would be pretty disastrous if Amex only grew revenue 5% per year, 2026 to 2029, and only 8% net income growth 2026 to 2029, 20 to 25 PE here, and I still make money. That's the trifecta. If I can get a mid 20s or higher CAGR in my bull case, around a 20% or higher base case CAGR, and I can still make money in my bear case, we're set. We're set, man. And so, that's why a stock like Amex is very compelling to me right now, right? But that's how you got to play this game. And you got to run through these different scenarios so you can understand what your risk is, what your reward potential is in regards to these stocks. And then you can actually get a feeling of I'm buying the stock and I'm getting a good deal on it or I'm getting ripped off, right? Because there's going to be some stocks you come across sometimes and man, that's a really exciting company. I really like where they're going in the future. And then you run your projections and it's going to say this stock is not a buy right now. It's going to say you're getting ripped off essentially. Your CAGR is not very attractive. And so for instance, if I ran Palantir projections 3 years ago, Palantir was a steal deal. Absolute steal deal. I could run my bull case, my base case, and my bear case, and all of them said buy Palantir essentially, right? And then if we fast forward to earlier this year, Palantir goes 200 plus. I was running my bull case, a base case, and a bear case on Palantir, and it was not good. The bear case was really ugly. The base case basically didn't have me making any money for the next several years, and the only way I can make money is a bull case. That means Palantir at 200 plus is not an attractive stock, right? No, of course, you can always be wrong on these, and that's the cost of doing business, but more than likely, if you understand a business well, you run your projections, you're going to likely end up being right in the end. And so a stock like Palantir, it proved to be a great buy 3 years ago when it was a $6, $7, $8 stock, right? And I think it will prove to, at 200 plus to not be a very good buy for the next 3 or 4 years, essentially, right? And so those projections can save you a lot of stress, a lot of time, and a lot of money by actually running them, okay? Huge, huge help to becoming a much better investor. Number 3 subject up here, the number 1 stock I will buy between now and the end of 2025. Okay, so first off, let me show you my possible buys watch list for the stocks that I'm looking to buy, okay? And then we'll get into that stock. Here it is. Meta. Meta's a steal deal right now, no doubt about it. American Express, I just showed you the projections on Amex, right? The thing with Meta is Meta's going to go through a little weird time because our earnings per share might not go up a ton in 26, 27 because of the depreciation situation, but the revenue growth is so strong that I think people are going to come flooding back to Meta because they're going to realize, oh my gosh, this is big revenue growth times. And at the end of the day, their operating income should skyrocket. Their operating cash flow should skyrocket. Remember, depreciation is a non-cash expense. So that's something to keep in mind there. Okay, so people might end up looking back by that over time, and especially with the revenue growth coming in the way it is. American Express, we talked about that one. I just showed you the numbers there. Adobe is a huge buy. We might get into that one very in depth here in just a moment. Okay, American Express, Amazon, always been a major CapEx spender. It remains the same. At the end of the day, AWS growth is starting to go up. We just reached 20% in the recent quarter from 17%. It looks like AWS is on the right path there. And then we know the e-commerce business is a beast, and we know the advertising business is just a profit machine, right? Salesforce, I love Salesforce here. That's another one I think is a great buy right now. RH is one I'm looking at potentially in 2026. If they come in with bad earnings, I wouldn't be surprised if that stock gets hit. Keep in mind, if December is a little shaky and ugly in the market, RH is likely going to get hit heavy. You could see that stock go all the way down 125, maybe even approach the $100 level. Estee Lauder, that one continues to be a great buy. Long term, I think that's a $300 stock. So the fact that it's still under 100, I love that one. Whirlpool, that one, I would love to start a position in 26. The problem is it's already started to run. It's a little frustrating to me. I expect appliance sales to pick up a bit in 26 versus 25, and then a big pickup in 27, 28 as you get people moving again and those sorts of things. No one's been moving for years now at this point in time. I think the real estate market starts to come back to life in 26 and then really starts to come back to life in 27, 28 as you get mortgage rates lower, right? Now, of course, if inflation came back huge again or something like that, then the real estate market could die again. But I don't have expectations of sky high inflation coming back again, essentially. Okay. Elf Beauty, this is one that remains a great buy at this point in time, $200+ stock long term. Nike, huge buy. The business has already turned around. And the great thing is with Nike, if we've been in a rolling recession, you should continue to see Nike numbers get better and better as 2026 rolls around, and then get much, much better in 27, 28. More stocks. PayPal. PayPal is a phenomenal buy. I have projections on PayPal, and it says it's a screaming buy right now. Kava. If this one is a tax loss harvesting candidate, so it's seen a lot of momentum this week, but don't count on that momentum necessarily lasting in Kava. There's still a lot of people likely sitting on huge losses. Almost everybody that's bought this stock has lost money on this stock, right? And so keep in mind, if there's a stock that could sell off again next week, and let's just call it for the remainder of December, it could be Kava. That one, I would love to pick it up around $40, or if it went into the 30s, that would be so ideal. Cake, that one continues to be a great buy. And so that one I just continue to buy. I bought Cake for several years in a row now at this point in time. It's been a moneymaker for me, but I think the money has been small compared to what the money will be over the next few years. Celsius Holdings remains a buy in my personal opinion. Bath and Body Works remains, that's one I would love to start a position in 2026. That one could see tax loss harvesting and had a nice bounce this week, but keep in mind, don't get too confident in some of these moves here. Fubo, another one I'm looking at there. I can't believe Fubo's $3. Come on, man. That's crazy. Honest, $2 chuck. That's wild. Absolutely wild. So as far as the stock I'm most excited to buy through year end, it is ADBE, Adobe. This stock is down about 30% in the past 5 years. I've come to the conclusion this is best risk reward in the market. It's the best risk reward in the market, bar none, and certainly the best risk reward in big tech. And that does include my almighty Meta. That does include even Amazing's on. This is the best risk reward in the market I can find in terms of chances I lose money on this, over the next 3 years versus, let's call it a double up or more over the next 3 years. It definitely favors me in my personal opinion, okay? The beautiful thing with Adobe is, I think the most underrated thing with Adobe is this business has an incredible moat around it. I mean, an absolutely incredible moat around it. And you got to understand, once people are locked into that Adobe ecosystem, they really can't leave, especially when it comes to big companies. And it's such a small part of their budget, it doesn't make sense for large companies to go swap out Adobe for anything else because of the whole product suite they have and the collaboration tools and all those sorts of things. So Adobe is the standard in the industry, and at the end of the day, big companies have to stay signed up for Adobe. No different than they have to stay signed up for Microsoft, right? Better tools can come out here or there to compete against Microsoft, but at the end of the day, every large company out there, mid-business, small business, pretty much has to be signed up for Microsoft products. Very similar phenomenon when it comes to Adobe, essentially, right? A gentleman named Arya did a phenomenal video. I actually shared this with my private stock group. He did a phenomenal video on Adobe. It was like a 40-minute plus video, why Adobe is impossible to disrupt, just running into that subject alone, and what a phenomenal video that was. He also did a part 2. That was like a 30-minute plus video, but if you really want to dive down the rabbit hole in regards to this subject, watch that video there, because he really goes down the rabbit hole and you'll walk away like, yeah, man, like Adobe is really, really like near impossible to disrupt, essentially, right? Now, it's interesting because I was just testing, obviously there's so much hype around Gemini right now and their model being the best and Nano Banana and all these sorts of things, right? So I was just wanted to test, I need a picture. And so I said, I need a picture of a massive mansion with a moat around it and the words Adobe in the middle. And I was expecting this beautiful mansion, right? And there's a moat around it and water surrounded it and whatnot, right? And so it gives me this dark, decrepit, this doesn't even look like a mansion. I don't even know what it is. What the crap is this? But I'm like, whatever. I said, make the photo sunny and happy feeling. So it does that for me, right? And once again, what kind of mansion is this? What is this? And this doesn't even look like a moat around it. It doesn't even look like a moat around it. I'm just like, whatever, okay? I said, put security guards and suits all around the property. Look at what it does. You flipping my flapjacks? It puts 1 billion security guards. I'm expecting it to put one here, one here, one here, one here, one here, 6, 8, maybe 10 security guards around the property, and it puts 1 billion. I'm like, how garbage is this? How garbage is this? I mean, it's cool, other people are impressed by this, but I'm if you're creative or if you're really into photography, videography, these sorts of things, it's just awful, man. I said, and I've tried these other products as well. I've tried ChatGPT and Grok, and oh my gosh, they're all just brutal. I said, less security guards. That was overkill. Here's what it gives me back. Dude, is this not still overkill? What are you doing here? I said, 10 to 15 security guards total. Such a simple prompt. You'd be like, this is so simple. You can't screw this up. Just put 10 to 15 security guards around the property. And look what it gives me back. Can you guys count how many security guards are here? Last time I checked, it's 100. Okay, come on. What are we talking about here? And people think Pepsi is going to cancel their Adobe subscription for the Super Bowl commercial because they're going to be disrupted by all these other products. Come on, man. What are we talking about here? Okay. Now, when it comes to Adobe, this company is way too cheap. 17 forward P. Next year, earnings per share growth of likely strong double digits. Next year, revenue growth of double digits, right? They're also partnering with all these AI companies. So yeah, that company, I'm going to be buying that heavy for the remainder of this year, maybe into early 2026. Appreciate y'all for joining me. Once again, for everybody that'll be celebrating tomorrow, happy Thanksgiving. And enjoy the Black Friday sale on 1000X. That will be the pinned comment down there. It's coming shortly, folks. Enjoy that. Much love and have a great day. We'll send you your Steel membership card, baby. 1000X. Oh, yeah.